Swayam Prabha. Digital India. Educated India.
योगः कर्मसु कौशलम्.
Hello friends, I am Dr. Raghavi and today we would be talking about the part 2 of accounting for non-trading concerns. In this part 2 of accounting for non-trading concerns, we will study about 1. Special terminologies used in accounting for non-trading concerns. 2. Meaning and list of capital incomes and revenue incomes and their accounting treatment for final accounts of a non-trading concern. 3. Meaning and list of capital expenses, revenue expenses and deferred revenue expenses and their accounting treatment for final accounts of non-trading concerns. 4. Understanding about components of annual accounts of non-trading concern includes A. Income and expenditure account, B. Receipts and payment account, C. Balance sheet. 5. Meaning and specimen of income and expenditure account. 6. Illustration on income and expenses in context of accrual system. We will commence with specific accounting terminologies used for accounting of non-trading concerns. The first terminology is capital fund or permanent fund. In business organizations, capital terminology is used, while for non-trading concern, capital fund terminology is used. It is a one-time income. Its retention in concern is permanent. Capital income, except special fund received or income capitalized by the concern, are disclosed under this head. It means capitalized incomes are added to the capital fund. The excess of income over expenditure, which is profit for trading concern, is added to the capital fund, and excess of expenditure is deducted from capital fund. It is loss for trading concern. Sometimes instead of adding excess of income over expenditure to the capital fund and deducting excess of expenditure over income from the capital fund, it is shown separately in liability side of the balance sheet. The excess of income of the respective year is added to it and the excess of expenditure is deducted from it. Excess of income is known as surplus and excess of expense is known as deficit. The second terminology is subscription or membership fees. Trading concerns are having regular source of income from sales. Generally, to continue the membership of the members, concerns regularly collect subscription or membership fees from members. This is the main source of income for the concern. All day-to-day expenses are met from these incomes. This is regular income for such non-trading concerns. This income is treated as the revenue income and disclosed on the income side of the income and expenditure account. Third, admission fees or entrance fees. Generally, all non-trading concerns collection of fees in form of admission or entrance fees from members. This collection makes them member of the respective concern. The fees is paid by the new member at the time of joining the organization is called entrance fees. Since the fees is paid only once by the member, it is clearly of non-recurring nature. Hence, it is treated as capital receipt and be shown in balance sheet as part of general fund. However, there is another school of thought without much merit which maintains that although it is paid once by the members themselves continue coming to or leaving the organization either voluntarily or non-voluntarily, for example, on account of death of the member. Therefore, entry and exit of members ensure that entrance fees is a regular or recurring item of receipt in case of non-profit organization in a respective accounting year. Thus, it may be treated as income during solving accounting practical problem. In absence of any information, it should be treated as capital income. If instruction is specified for considering it as revenue income, disclose it at the credit side of income and expenditure account. 4. Life membership fees. There are two methods to pay membership fees. 1. Annual membership fees and 2. Life membership fees. Many members pay life membership fees in full amount predetermined by the concern instead of making payment every year to the concern. When no instruction is given, then it is to be treated as non-recurring. It is directly added to capital fund or general fund. 5. Donation. Two types of donations are received by these kinds of concern. 1. General donation and 2. Donation for specific purpose. Generally, donation income is treated as capital income and added to the capital fund. When a concern receives donation frequently and no instruction is given for the donation, in this case, donation is added to capital fund in the balance sheet. When the purpose for which the donation is to be utilized is not mentioned, it is called general donation and treated as income. However, if amount of general donation is very large, it can be treated as capital receipt. Thus, general donation of relatively small amount is credited to income and expenditure account, and general donation of relatively large amount and specific donations are recorded on liability side of the balance sheet. Donation or charity received for a specific purpose like donation for building, donation for extension of library hall, donation for library books, donation for seminar room, donation for sports activity, etc. will be treated as capital income and disclosed separately as a specific fund in the balance sheet on the liability side. On completion of the purpose for which specific donation was received, the amount of specific donation fund should be transferred to capital or general fund. 6. Funds for specific purpose. Sometimes amount is received for a specific purpose and it is used for that specific purpose only. Since these funds are to be used for a specific purpose, these are not added to the capital fund in the balance sheet, but disclosed as a specific fund. For example, President Felicitation Fund, Prize Fund, Building Fund, etc. Any expense incurred in this regard is not disclosed in the income and expenditure account, but it is deducted from the respective fund account on the liability side of the balance sheet. For example, if prize fund is received, then prize expense is disclosed by deducting it from the prize fund on the liability side of the balance sheet. If the amount of fund is invested in certain types of securities, the amount of interest received is added to the respective fund. 7. Legacy. Amount received by non-profit organizations as per will of a deceased person is called legacy. As this item is of non-recurring nature, it is treated as capital receipt and recorded on liability side of the balance sheet. However, if the amount is small, it can be credited to income and expenditure account. 8. Locker's rent. There are certain types of non-trading concern as part of system provide lockers facility. Clubs provide facility of lockers to members to keep sports equipment, pairs of clothes or any other belongings in a organized manner and safely. Members keep their belongings in these lockers. To provide this service, club collects rent from the members, which is known as lockers rent. Lockers rent is a revenue income for the concern. This income is credited in income and expenditure account. 9. Honorarium. Payment to non-employees for services received is called honorarium. It is a revenue item and debited to income and expenditure account. 10. Endowment fund. It refers to a fund from a gift. The fund contains assets given by the supporters with a condition that the income earned by these assets but not the gift itself can be used for principal activities of the organization. Hence, the gift is restricted fund from the point of view of non-trading concerns. The fund is treated as capital received and recorded on the liability side. Let us see the items which are categorized into different categories from the viewpoint of income and expenses. The first one is capital incomes. Receipts of such incomes is not regular in nature and are used for a longer period of time. These items are disclosed at liabilities of balance sheet. Let us see these items which are capital incomes in nature. 1. General donation, where purpose is not specified by the donor. 2. Donation for specific purpose, such as 1. Donation for tournament, 2. Donation for books, 3. Donation for ground, 4. Donation for equipment, 5. Donation for land, 6. Donation for building, 7. Donation for prize distribution, 8. Felicitation fund, 9. Donation received for pavilion. Third category is loan borrowed. 4. Life membership fees. 5. Entrance fees, where instructions have to be followed as specified. 6. Charity. 7. Legacy. 8. Sale of assets. 9. Capital fund. Let us move on to the second category, which is revenue incomes. Receipts of such income is regular in nature and are used for respective accounting year. These items are disclosed at credit side of income and expenditure account. Let us see these items which are revenue incomes in nature. 1. Subscription of members. 2. Entrance fees as per instruction. 3. Rent received. 4. Income of ground. 5. Rent of hall. 6. Profit on sale of assets. 7. Interest on investments. 8. Bank interest. 9. Sale of old newspapers. 10. Income of canteen. 11. Lockers rent. 12. Government grant or subsidy. 13. Ground rent. 14. Income of lectures. 15. Sale of drama tickets. 16. Small amount of donation or charity. 17. Entertainment program income. 18. Sale of scrap. 19. Case paper fees in case of hospital. 20. Sale of assets. The third category is capital expenses. Payment of such expenses is not regular in nature and are used for longer period of time. These items are disclosed at asset side of balance sheet. Let us see these items which are capital expenses in nature. 1. Purchase of assets, which includes land, building, investments, equipments, ground, furniture and books. 2. Construction of pavilion. 3. Color expenses of new buildings. 4. Expense to increase efficiency of assets. 5. Expense for a specific purpose. 6. Electricity connection expense. 7. Expense of swimming pool. 8. Purchase of X-ray machine. 9. Wages for installation of machine. 10. Investment of prize fund in government securities. 11. Books for library. 12. Sonography machine. 13. Billiards table. 4. Revenue expenses. Payment of such expenses is regular in nature and are to be used for respective accounting year. These items are disclosed at debit side of income and expenditure account. Let us see these items which are revenue expenses in nature. 1. Subscription of newspapers and periodicals. 2. Telephone bills. 3. Salary of groundsmen. 4. Canteen expenses. 5. Depreciation on assets. 6. Loss on sale of assets. 7. Insurance premium. 8. Rent and taxes. 9. Advertisement expenses. 10. Repairing expenses. 11. Postage expenses. 12. Stationery and printing. 13. Salary. 14. Administration expenses. 15. Ground maintenance expense. 16. Sundry expenses. 17. Entertainment program expense. 18. Expenses of program. 19. Audit fees. 20. Annual dinner program. The fifth item is deferred revenue expenses. Payment of such expenses is not regular in nature and proportionate amount is written off in respective accounting year. These items are disclosed at asset side of balance sheet. Let us see these items which are deferred revenue expenses in nature. 1. Ground leveling expense. 2. Significant amount spent on coloring work. After having clarity about capital and revenue incomes and expenses as well as deferred revenue expenses, we will discuss about different components of annual accounts of non-trading concerns. 1. Income and expenditure account. 2. Receipt and payment account. 3. Balance sheet. Let us commence with income and expenditure account. Income and expenditure account is similar to profit and loss account of trading concerns. Non-trading concern follow the same principles or rules for preparing income and expenditure account which are followed by commercial concerns for preparing profit and loss account. Important things to be noted for it are: 1. It is a nominal account. Thus, for it, rule of debit expenses and losses and credit incomes and gains are applicable. It records all expenses and losses on debit side and all incomes and gains on credit side of the account. As it records income and expenses, the word expenditure is used here in the sense of an expense. Second, all income and expenses which are revenue in nature are recorded in this account. All expenses are recorded to the debit side of income and expenditure account and all incomes are credited to its credit side. Transactions of capital nature are not included in the income and expenditure account, but the portion of capital expenditure which expires during the year is charged to income and expenditure account as depreciation or portion of deferred revenue expenses. Third, this account is prepared on mercantile basis. Thus, it includes incomes and expenses of current year on accrual basis irrespective of flow of cash. Therefore, adjustment related to outstanding expenses, prepaid expenses, accrued income, unearned income, etc. are taken into account. 4. Excess of credit side over debit side is termed as surplus or profit in case of trading concern, but in case of non-trading concerns, it is known as excess of income over expenditure. However, if debit side exceeds credit side, there is deficit and is termed as excess of expenditure over income, like transfer of profit or loss to capital account in case of trading concerns which are profit making entities, surplus or deficit of non-trading concerns which are not profit organization is transferred to capital fund. 5. Income and expenditure account will not have any opening balance. It is a nominal account, thus it is closed every year at the end of the accounting year and transferred to capital fund. It means it will not have closing balance also. Now, let us see a specimen of income and expenditure account. On the debit side of income expenditure account, the very first item is to revenue expenses of the current year. In it, the first item included is expenses which are paid in cash during the current year. In it, the outstanding revenue expenses of the current year are added. Further, the expenses which are paid in advance during previous year are also added to it. The outstanding revenue expenses which are paid during the current year are deducted. The expenses which are paid in advance for the next year would also be deducted. The total revenue expenses of the current year is written in the amount column where the red tick mark is shown. The second item is depreciation followed by loss on sale of asset. Moving to the credit side of income and expenditure account, the very first item is the revenue income of the current year. This is arrived by including the revenue income received in cash during the current year. In it, we add the outstanding revenue income of the current year as well as revenue income received during previous year. From this, we deduct outstanding revenue income of previous year which were received during current year and the income received in advance for the next year. The total revenue incomes of the current year is written in the amount column where the red tick mark is shown in the amount column on the credit side. Then the next item to be included is the profit on sale of assets. Depending on the situation, either the income would be more than the expenditure or the expenditure would be more than the income. If the income is more than expenditure, it would be shown on the debit side of income expenditure account, which indicates that there is excess. On the other hand, if expenditure is more than income, then it is shown on credit side of income expenditure account, which indicates that there is a deficit. Since income and expenditure account is prepared on mercantile basis, let us understand its accounting treatment for income and expenses respectively under mercantile system. 1. Income related illustration. accounting information for subscription for the year 2023-24 is given. The first entry is subscription received in 2023-2024. The amount is 1,45,000. 2. Received in 2022-2023 for 2023-2024 rupees 8,000. 3. Outstanding of 23-24 is rupees 11,000. Outstanding for 2022-23 is rupees 4,000. Received for 2024-2025 is rupees 7,000. Received in 2023-2024 for 2022-2023 is 6,000. Let us calculate the amount to be credited to income and expenditure account. Let us see the explanation. Subscription is revenue income for non-trading concern. It will be disclosed at credit side of income and expenditure account. The current year is 2023-2024. The previous year is 2022-2023. The next year is 2024-2025. Let us see its disclosure. On the credit side of income expenditure account for the year ending 31/3/2024, we can see subscription received in cash in 2023-2024 is rupees 1,45,000. In it, we would be adding subscription received of current year, which was received in previous year. The amount is 8,000 rupees. In it, again we would be adding outstanding of the current year. The amount is 11,000 rupees. From this, we would be deducting the subscription of next year received in the current year. The amount is 7,000 rupees. From this, we would be deducting the subscription amount received of previous year in the current year, and the amount is rupees 6,000. The total comes to 1,51,000. The point to be noted here is that outstanding subscription of rupees 4,000 of previous year, which is 2022-2023, will not appear in income and expenditure account of current year. It will appear at asset side of balance sheet of the current year with title subscription outstanding of 2022-2023. Another point to be noted is that subscription amount of 2023-2024 would be rupees 1,51,000. Moving on, let us see an expense related illustration. The accounting information of general expenses for the year 2023-2024 are given. Expense paid in 2023-2024 is rupees 1,78,000. Paid in 2022-2023 for 23-24 is rupees 8,000. Outstanding of 2023-2024 amounts to rupees 15,000. Outstanding of 2022-2023 is 12,000. Paid for 2024-2025 is 9,000. Paid in 2023-2024 of 2022-2023 is rupees 6,000. We will now calculate the amount to be debited to income and expenditure account. Let us see the explanation. It is general expenses. It will be disclosed at debit side of income and expenditure account. Current year is 2023-2024. Previous year is 2022 2023. Next year is 2024, 2025. Let us see its disclosure. On the debit side of income and expenditure account for the year ending on 31/3/2024, we can see that general expenses paid in cash in 2023-2024 is rupees 1,78,000. In it, we would be adding general expenses of current year paid in previous year amounting to rupees 8,000. Further, we would add outstanding general expenses of current year amounting to 15,000 in it. Further, we would be deducting the expenses paid in the current year of the next year rupees 9,000. From it, we would be deducting the previous year expenses paid in current year, which amounts to 6,000 rupees. Overall, the total expenses come to 1,86,000. The point to be noted here is that outstanding general expenses of rupees 12,000 of previous year, that is 2022-2023, will not appear in the income and expenditure account of current year. It will appear at liability side of balance sheet of current year with title General Expenses Outstanding of 22-23. The general expenses for 2023-2024 because of this is rupees 1,86,000. In this part 2, we have acquired information about 1. Special terminologies used in accounting of non-trading concern. 2. Meaning and list of capital incomes and revenue incomes and their accounting treatment for final accounts of non-trading concern. 3. Meaning and list of capital expenses, revenue expenses and deferred revenue expenses and their accounting treatment for final accounts of non-trading concern. 4. Understanding about components of annual accounts of non-trading concern, which include A. Income and expenditure account, B. Receipt and payment account, C. Balance sheet. 5. Meaning and specimen of income and expenditure account. 6. An illustration on income and expenses in context of accrual system. In part 3 of accounting for non-trading concern, we will study about 1. Meaning and specimen of receipt and payment account. 2. Difference between income and expenditure account and receipt and payment account with illustration. I hope this helped you, and we will again meet in part 3. Thank you.